How does inflation impact the Federal Reserve's decision on rate cuts? This question has been at the forefront of economic discussions recently, as inflation continues to run hotter than expected, complicating the Federal Reserve's path for potential rate cuts. In the past year, inflation has been a significant concern for the Federal Reserve, as reported by MSN. The rising inflation rate has muddied the waters for the Fed's decision on rate cuts. This is because the Federal Reserve uses rate cuts as a tool to stimulate the economy during downturns. However, with inflation running higher than the 2% target, this traditional tool becomes less effective. Output: European and Asian markets experienced mixed trading following the Federal Reserve's decision to raise interest rates by 25 basis points to combat inflation, as reported by CNN in March 2023. This decision stirred uncertainty within the banking sector, particularly in Europe, leading to declines in major indices like DAX and CAC 40. However, it wasn't all doom and gloom. The Hang Seng Index in Hong Kong surged, with companies like Tencent leading the gains. The reaction from the U.S. markets was more cautious, with the Dow and S&P 500 closing lower. Despite these concerns, U.S. futures were up in pre-market trading, indicating some level of optimism among investors. Billionaire investor David Rubenstein shared his perspective in a Business Insider article dated December 18, 2023. He believes that a U.S. recession is not imminent in the next few quarters due to the current strength of the U.S. economy. Despite concerns that the Fed's rate increases could lead to a downturn, Rubenstein predicts that the Fed may start cutting rates in the second quarter of next year to control inflation. So, to summarize, inflation continues to be a significant concern for the Federal Reserve and the global economy. The Fed's decision to raise interest rates has created uncertainty, but also some degree of optimism. Experts, such as David Rubenstein, believe that while the situation is complex, a recession is not imminent. The Federal Reserve is likely to start cutting rates in the second quarter of next year, but the timing will be carefully chosen to avoid political criticism. Inflation's impact on the Federal Reserve's decision on rate cuts is a complex issue that requires constant monitoring. As the situation evolves, we will continue to keep a close eye on the Fed's moves and the global response. Until then, remain vigilant and informed, because knowledge is the best tool for navigating these uncertain economic times.